Hey everyone, Tim Manfro, aka Mortgage Manfro, and today I want to talk to you guys about supplemental taxes. Something not a lot of people talk about, but it can be something that could be a landmine for a homeowner after they purchase a home. So for those of you that don't know, supplemental taxes are basically the taxes that bridge the gap between the previous taxes, so the previous owner's taxes on a property, and the taxes that will be put in place once the county adjusts them based on the purchase price of the new owner. It takes about a year sometimes for those to be adjusted. So in that meantime, the county will send out a supplemental bill that essentially bridges the gap. Now, this bill technically is not the responsibility of the lender. Okay, so if you have your taxes and insurance included in the payment, this is not something the lender is going to automatically pay. It's going to be sent directly to you. And this is where people get caught up, okay? Because they'll just ignore that bill because they think that their taxes and insurance are included. And then what ends up happening is it doesn't get paid and it causes all kinds of issues. Essentially and eventually it will have to be paid by someone. And what also will happen is the lender will look at the taxes that are currently on the property because those sometimes can be much lower, and they won't basically calculate those supplemental taxes and calculate in the yearly tax rate, and they'll think that they're collecting too much money in your actual mortgage account if you have your taxes and insurance included, and they will adjust the payment and send you a refund, and and then eventually once they figure out that they did that incorrectly, there'll be price to pay. You'll have to pay money back. The actual payments will go up. So this is something that could be super major. So supplemental taxes are something we got to keep a super close eye on. When you are a homeowner, it really only happens within the first year. But anytime you ever get a bill in the mail that says you need to pay this, don't just assume it's being paid by the mortgage company, even if you have your taxes and insurance included. Reach out to your loan officer. There are solutions. We can ask the actual mortgage servicer to pay the supplemental taxes, because when we set up the actual loan, we set up the impound account based on what the taxes are going to be based on the purchase price, so the eventual taxes. So there should be enough money to pay those in there, but it's going to have to be a process to get them to actually pay those. So long story short, supplemental taxes, if you ever get a bill, reach out to your loan officer or me. I could help you figure it out if I'm not your loan officer. And then also to make sure if you ever get a check in the mail from your mortgage company saying they've collected too much money and your payment's going down, if it's too good to be true, that means it's probably not real. So Tim Manfro, aka Mortgage Manfro, supplemental taxes. If you guys have any questions about that, make sure you reach out.